All right, guys. So it looks like I'm actually able to stream now on YouTube, so we're good there. And let's go ahead and go over a couple things. I want to get us ready to go into next week. So I want to talk about maybe where the skew is right now. We'll look at the fear and greed, kind of just see what's going on in the market. As far as this morning is concerned, we have, we've taken a couple trades, but for the most part, we open up immediately into NVIDIA and some Tesla and Apple. Melissa's trimming some Apple up to about 58% or so. The SPX, we were looking for 4,100 there. And we'll talk about that. But I really want to get into, because I think this is a really difficult time in the market because you're hesitant, right? I mean, I can't sit here and lie to you and tell you that I'm not feeling like, okay, like, is this getting a little euphoric? Is it hard for me to execute a trade? I just want to kind of go through that with you so that you understand we're probably much alike in this situation right now. Okay. So I'm going to sit down for a few minutes. We'll go over kind of the things that I look at to gauge whether or not we still have room to run. And if that's the case, we just kind of wake up and try not to be biased and just take our trades outside of the PMZ and so forth. Okay. So let's go ahead and start here with the ES futures with the weekly look. Okay. And we're going to come back here. And this is, again, we've been using this blueprint for several weeks now. And I want to go over it with you so that you can understand exactly what I was looking at quite some time ago. So the best thing to start with is this first inside candle. So here at Trendy Trading, we're teaching you're always looking down and to the left and looking for demand on a pullback. Okay. Once you find that demand zone and then we go inside and up, that's this is what you have right there, inside and up formation. And again, I have a quick video on YouTube. It's 4 minutes long, I think. It teaches you how to identify these formations, okay? Once we go inside and up, and you don't need to wait for the candle to close here, all right? We teach you how to anticipate or to forecast this move. And the reason why we are forecasting and looking for the inside and up to actually complete is because somewhere over here, we already found the demand zone. And the idea is that when price comes into demand, we'll then create another inside and up formation or demand out of that. Okay? So we identify the demand. Notice the box that I drew in this case is not here. Let me show you. There's several different options. Some people might actually use the wick and it would be this thick. Some people might just use the body. It would look like this. And for this situation, I went ahead and went underneath this structure. Okay. And the reason why I did that is because this is a very nice candle and it's followed up by a continuation candle to the upside. So I just want, basically, if you were to think about it, this is where the velocity of the candle moved out of, and this creates a cushion. So this is like a bed, right? Right? Imagine there's like a head right here. You're laying down. You're comfortable here. If price ever comes back, all right, we're looking for it to bounce off of that support. Okay. So the first thing that got us in the idea of being long back in the day was in this area. Then we moved up into the cloud. And remember, the cloud is resistance until proven otherwise. And I'm just going to outline it for you. Okay. Notice when price came down into this area and then we went bid and made that inside and up, the cloud was pretty wide. Cloud right here could be your target. The edge right here could be your target, that blue one. And so we push up into the cloud and then we just kind of drift sideways. We go inside and up again, inside and up, and then we get very close to supply. Now, I remember this time because I was feeling a lot like I'm feeling right now. I was very bullish on this move up. I think this came around FOMC. And we were so close. I mean, really 41.78 or so. And we were looking for 42.24. And sometimes the market has a tendency to kind of surprise you and or humble you. And right before it gets to price, it turns. All right. somewhere in here, you would find that on a lower time frame, we actually came into a little bit of a supply zone. Matter of fact, if you were just to look at this topping wick, another video that I have on my YouTube page that you guys can watch, it's very important. So the inside and up, inside and down formations. And then the top and wicks let you know that there is selling pressure in this area. So if we were to just take a box and do this and find that topping wick, you would see this is where price stalled during that FOMC. Now, price came down. It found the inside and up here, not down here. So this area is still open. But it came back and it found this inside and up formation. And ever since then, around 12:19 or so, price has found its way to the upside again. Now, this is what we call a rounding bottom. Okay, this is the next thing that led us to the upside. Rounding bottoms, price comes into demand, inside and up formation, folks. Trendy edge to find that demand. It's automated. And then we start to make a higher low. And immediately, I remember this week, I'm looking for a rounding bottom. As long as the next week doesn't make a new low. That means I'm staying long as long as we are not breaking down below this low. Notice that the cloud continues to be resistance here. See that? And finally, we get a breakthrough. Now, what's really crazy about this entire rally is the fact that there's a lot of noise around it. You know, oh, well, back in these years, this type of thing happened, right? And really, if you think about it, the market had pulled back quite a bit. A lot of stocks were down, at least the ones that are popular, were down quite a bit, 60, 50, 70%, even some of those, okay? Meanwhile, we came into demand and we're making a round and bottom. So the entire market is kind of getting some sort of bullishness here. But when you look at the bigger picture, I can see where bears might feel as if this is just routine. This is just what we would consider a bounce up. And if you think about it, some of the big moves up have just pushed us right into resistance. Well, if I'm looking up and to the left, you can see that we've moved past this trend line. We've actually created an inside and up formation. I'm getting a buy signal. Now, just so that everybody understands, we've been long since the beginning of this month. And so we're having a good time, right? It's a good time. However, is it time for a yellow flag? And this is where I get into looking at the skew, and I'm looking at, there's a lot of stuff that I'm looking at. And I want to go over that with you because it may give us some confidence to trust in the rally. But again, I'm going to give you levels that I feel like it's if this, then that, okay? So right now, as far as the weekly is concerned, okay? And good job there, Melissa. Let's go ahead and give that some fire right there. And I encourage you guys to, light it up with some emojis here because I'm sure you guys are doing well. But as long as this inside and up formation stays here, what it's telling me is we are anticipating that price must move up from the inside and up formation to create demand. See, price can move up here to supply and then pull back. And then this would be the demand zone that we'll find. We'll take this one right here and we'll move it up. Okay. So as long as this formation stays intact from a technical standpoint, I am bullish. This is what I live by. Inside and up, inside and down translates to supply and demand from an institutional standpoint. Okay? Again, no noise. I don't care about what the news is trying to tell you right now. Okay? Technicals. That's it. Now let's go ahead and go over here to the daily. We have 2 days up. One thing that we can come up with when looking at the entire market is that the market likes to kind of give you the same repetition over and over in most cases. So if you take a daily chart, that means every candle represents 1 day, and you go back 1 year, you can get the personality of the market. You can understand that the ES futures, okay, if we were to open this up a little bit and we go back 1 year, okay, and that means going all the way over here. And sorry, it just they're putting a pool in my backyard, and the guy like put up a fence around the dirt pile, and he just tripped over it and fell face first in the dirt. He's okay, but I think he was a little embarrassed. But sorry about that. If we go back to 1 year, what I want you to do is that you just count. And I've shown you this many times, but I want to go over this entire thing, and I'm not recording this, I'm streaming it so you can go back to the live feed and watch this, okay, over and over. So what we can find out is that the market has this pattern repetition. 2 to 3 days is what I'm always telling you guys. The market likes to move in a cycle. Does everybody understand what a cycle is? A cycle, right? We have an uptrend. Right? We have a downtrend, that's a cycle. We have a cycle of sideways. Okay? And so those are different cycles in the market. And typically, the ups and the downs last about 1 to 3 days. All right? So somewhere in there. So when we start approaching towards 2 to 3, you start to kind of raise a little bit of a yellow flag, because that next cycle, either sideways to down, is coming. But from a supply and demand perspective, what I'm looking for are my levels, right? Okay, sure, we may be 2 days up, but am I close to a level where I would expect to pull back? In this case, on the daily, I'm actually hitting a level of resistance, 40.89. And basically what I've done is just come over here and I found the supply zone. I picked out a spot. I used some wicks over here and we've tapped that and we're just kind of pulling back. So again, just a yellow flag, that's about it, okay? Just a yellow flag. Just means if you're in longs, bring your stops up, trim, that type of thing. All right. So this is the next step that I want to look for. Pattern recognition. All right. And again, I encourage you guys to go back and you'll see that it lasts about 1 to 3 days. Sometimes there's a 4th day in there. So if you're hitting 4 to 5 days, you can bet that the higher probability is there's about to be a turn in the market, because that's kind of outside of the average. Okay. So we've worked from a weekly to a daily on the ES futures. Again, the ES futures are how I guide my portfolio. Right now, just so everybody understands, before we move on, the higher time frame, I am looking for this to play out to move up towards the 41.31. And again, I would love to see supply hit. Okay, 42.24 by 43.28. Why? Because the formation right now is sticking. Doesn't mean we can't go sideways for another 2 weeks and then up or down. We have some big names reporting. But as long as the bulls can hold 4,016 by 4,000, then I feel really bullish going into next week and the next week and so forth. And these levels will change. Okay? Now, from a 4-hour perspective, we're having a good time. This is what we call the stair stepper. Okay? We've created some demand right here, and again, support is around 4,000. And you can see that there's an inside and up formation. We've pushed very nicely above the EMA cloud. This EMA cloud, we looked to buy the dip this morning, right? We got into Tesla, we got into NVIDIA, and basically, you don't even need to look at Tesla and NVIDIA, but the market kind of followed the ES futures, came into the cloud, and then boom, went bid. Why? Because if we come over here and we look at the entire market, you can see the banners are extremely bullish going across the board. Right now, on a 5-minute time frame, we are going inside and down, and I told you that for the next 90 minutes, and this was several minutes ago, this is the range that I'm expecting the market to go into. Why? Because if you're just waiting to go long up here, right, today, you're just waiting to go long and it's up here, then you waited too long, okay? Market makers know that. They'll pull it back. It doesn't mean we can't make new highs later on, but their job And my job would be, if I'm trying to take your money, is to burn your premium right in here. Okay. So it's a if this, then that for the rest of the day. If price can break above 40.93, I think we're headed to 4100. If we break down and come down towards 40.70, I would be looking to buy a quick little bounce. And then if we make it back to the PMZ, same thing, looking for a quick bounce. Today's trades are only 2 points of risk. This morning gave you the opportunity to go long out of the PMZ, providing you over 20 plus points to the upside with only a 2-point risk of trading our methodology of the PMZ. All right, so let's move on to what I feel like is the good stuff. All right, we're going to pull up TV. This is TradingView. All right. Now, when I'm doing a broad market analysis every weekend, I'm providing you my opinion and my technical analysis on the ES futures. So you heard what I just had to say. Now let's look at what the market is telling us. Okay. So the first thing I want to look at is go to the DXY, which is the dollar. And I like to look at this from a monthly perspective. Let's go ahead and take a look. So if we come over here, we had been anticipating for 1, 2, 3, 4 months. So one thing that I'm very proud of here at Trendy is when the masses were super concerned and worried and telling you that the world was going to come to an end, Trendy had identified that we had an inside candle. And from the get-go, as soon as price could not make a new high and we broke below this body, I told my members, and I've been very convicted on this, is that the dollar would move back down into the cloud. We would get a small bounce, and then the bounce would not get over 23 to 38% of that move down. It did not. And then I said we would come into the inside and up formation. Now, notice the new notes that I've been saying here. The possible new cycle down in the market could happen in this box. Timing is the variable. So what do we know so far? And I'm going to keep going back to this. The ES futures looks like it's just getting ready on a weekly to give us a buy signal. The market's been trending for about a month to the upside. People are getting very comfortable, right? It's like going to the fair, throwing a dart, hitting a balloon. You can't miss, right? Some people do, right? And some people probably miss this rally. But the idea here is that the dollar has come into demand, and so I would expect the dollar to bounce a little bit. Notice that the dollar is bouncing. This is the first time I looked at it today. All right. So the dollar is bouncing a little bit, and the market's up. People are probably like, or the market's kind of flat, really. So just be cautious that the dollar is inside what we call a demand zone. And just like the equities, when they come into demand, I'm looking for them to push up. Well, in this case, dollars come into demand. And as long as it's in the green box, I just want to raise a yellow flag. It doesn't mean that I can't be long. It just means that I'm being careful and taking profits when I see them. Okay. Now let's go ahead and go over to the TNX or the Treasury and take a look here. The idea here was the same way, folks. When everybody else was looking for that big move to the downside, we made it pretty straightforward. I said if price gets over 4.579, then possibly you would see a capitulation event. Soon as price made a topping wick, we then went inside. We went inside and down, and the same story as the dollar. I was looking for the cloud first, and if price breaks down, I have this green box here at 2.8. Okay, this is the TNX. Basically, what I want to see on the Treasury is things just calm down. I don't really care if it wants to dip lower. I don't want it to move up over this yellow line, and I'm okay with it just kind of going sideways here. Okay, but this is the blueprint. And as long as if we take these Fibonacci's and we go to the pivot high and we come to the pivot low, as long as TNX cannot move over 3.73 right now, then I believe that it continues to chop and move down. Let's go ahead and create an alert around that 3.75. Okay, so we'll take that off. That's the TNX. The next thing is the skew. Let's go ahead and take a look at the skew. Now, what have I been saying? Every broad market analysis, every weekend, I keep telling you that the bears think that for some reason the market has to go down, but yet just making a simple note here, looking at the skew, every single time that skew has dropped to these levels, to this red line, the market has ripped faces off every single time. Your probabilities were pretty high. Sure, the past is not indicative of right now and the future, right? But I like my odds here. And if you were to put a SPY chart behind this, you would see that every time that the skew came into this red line, that the SPY shot up. Now, what is this telling us? When the skew is down here at this red level or even this green level, it's a risk on environment. What it's telling me is that max participants, the majority of participants, are on the put side when the skew gets down to these levels. Does everybody understand that? The majority, the participants in the market are on the put side when the skew gets to these levels. If you were in charge of the market, what are you doing if everybody's on the put side? What are you doing? You're going to rip the faces off. You're going to take their money and you're going to kill their put positions. Why in the world would you just, okay, yeah, it's almost like being euphoric to the upside. Now you have euphoria to the downside, right? Now you want to short the market, right? Where do you want to short the market? You want to short the market when the majority of participants are getting on the long side. We're kind of getting there, right? We're kind of getting there. Now, one of the things that I pointed out, and this is interesting from using a technical standpoint of my methodology on the skew, is looking at this like if I were in a stock right now, I would say, hey guys, we're in the cloud. I expect a little bit of choppiness, but if we break outside of the cloud, I'd expect this thing to take off. And I would expect to hit 130.57. So this is what I've been saying here at Trendy Trading. This was risk on. We've been risk on here in the room, where majority of our trades are to the upside. Okay. Our lead traders, myself and Melissa, up on the year. We're reading the market well. But is it time to go short? Timing is always the variable. Everybody wants to pick the top. My whole thing is I want to ride the trend, but as we get closer to these levels, what I'm doing is actually easing off the number of trades that I have in my portfolio. Does that make sense? And if you guys have any questions, feel free to use the chat room to ask those questions. Okay? So I'm reducing exposure. I'm having more of an intraday as we get up here. Remember, if you look back, I've had swings that were holding overnight and we're capitalizing off of those swings. Now it's getting more into an intraday type of trade for me. Okay? Why? Just because it's a yellow flag. I need the go ahead again. And that's not going to happen until we know that the ES closes on that weekly inside and up. All right. And that we're not having any problems over here. So if the skew were to move up here and the dollar stays in that green box and it's not really pushing up and the TNX is not really pushing up, the way that I look at this in a measurement is that you have about right here, there's an inside and down. Okay. Inside and down formation, okay? We had support here, and if I were creating a zone, that zone would be about right here. The idea is that demand pushes price into supply. This is the skew. It's a little bit different. It's more of like a sentiment, if you will. But this is where price could push, and I've been saying I really want to be cautious to the long side if we start to get into that more of that 125, 130, 135 in here. Okay? I want to be cautious because what happens over here? The majority of participants are on the long side. Now, if I push and go to, let's go over here and go to fear and greed. I've been saying this. I want you to close your eyes and think about this. First, look at this fear and greed. If the skew has X amount of room to still run to the upside, right? And the dollar actually is not all the way to the bottom of that green zone yet. You have this much room, folks. This much room to play with. And I know this is hard for you if you're a bear. All right? But all I'm telling you is 69 out of 100, you still have room, bulls, to burn the bears. Right? They think it hurts right now, but you're at 69 and you could peg this thing to 99. And what that would mean is if I peg this at 99, yeah, there's still fuel in the tank. All right. If I peg this around 99, what happens is if we come over here, this is going to look like this after a week or two, after Apple, Amazon, Google, all those type of names. This is going to be in here, and I mean, everybody's going to be euphoric. Hedge funds are wondering, hey, man, nothing can go wrong. Your banks are probably calling you up. Hey, Mr. Jones, you ready to put all your money back in the market, man? Things are amazing, right? Nothing can beat this market. And that's about the time that the skew pushes into these extreme levels of protect risk off. Okay, your fear and greed is at extreme greed. Your dollar's at the bottom of the zone. The TNX is at the zone. And all things are lined up for a potential move down. Now, the problem is that bears for many, many centuries, right? If you think about it, they, for some reason, hang on to the past. Right? When really, I think that traders really should just trade the cycles. Stop trying to figure out when the next crash is coming. Stop trying to figure out when the big move is coming and just trade the cycles. You can make money in and out of the market by just trading cycles. Nobody's paying you to figure out where the market's going. Are they? No. Talking heads, it doesn't matter. It doesn't matter what news channel you look at. It doesn't matter what service you go to. Everybody has an opinion. Just stick to the technicals. Okay? The technicals here on the VIX, all right? Now, when I put the VIX in here, I'm going to go over to the weekly. Check this out. Okay. Go ahead and turn the edges on here. Now check this out. Finally, 18. If you guys remember back in the bull market, this level right in here around 16 to 14 was the area that we really hung out at. There's no volatility in the market. That's not a good thing. So while we're sitting here, I want to remind you that the market at any time, folks, can take the volatility away from you. And will you be ready for the change? This is another thing that we really haven't talked about in probably, I would say, 8 months to a year. Volatility came into the market and everybody, loves it because what it does is give you big range expansions in price. You're able to make a lot of money if you're right on the side of the trade, okay? What if volatility comes out of the market and we just kind of hang out in here? So just beware if VIX gets down into this range, okay? It can stay here. It does not have to spike. Bears, the market does not have to crash. And if I were in charge of the market and I were to give you that bias in 2022 and you can't get over it, you're going to have a really hard time making money this year. Let that sink in. They do not have to make the market go down. They can simply push it up, confuse everybody, make it go sideways into the next quarter, and you're sitting there just wondering, like, what's my next move? Learn to create a process where you can trade in any type of market. That's what we do here at Trendy Trading. We have the edges. We use supply and demand. We use the PMZ every single day, in and out, regardless of what the market conditions are giving you. Now, another thing to think about, that was one scenario that it didn't have to do anything. However, if we're reaching supply zones, the dollar is starting to bounce out of the demand zone, okay? TNX is starting to rise. We are at extreme greed. There is a possibility right in here, just draw a trend line, folks, that if the VIX comes down into this level, you could see that spike, at least into the cloud. And this would let us know that we're ready for that next cycle to the downside. So it's always like timing is the variable. Typically, when all those things line up, and I'll let you know in the broad market analysis, when those things start to line up and I feel it, what I want to do is I want to buy puts and some extended names out of the money and give it some time. You know, somewhere like I would say 2 to 4 weeks, somewhere in there. Okay. You don't have to get silly with it because remember this. The majority of the market is going to be super euphoric. So the people are too comfortable. They're selling you puts for the cheap. Does everybody understand that? Your puts are cheaper when the majority of the market is euphoric on the call side. They never think the market's going to do anything, right? The market can only go up, right? So guess what? You get to buy the puts for cheap. Just like you get to buy the calls for cheap when the market moves down into demand. Okay? So these are the things that we'll be waiting for. And right now, going into next week, folks, my overall sentiment is that we still have big names reporting, right? We still have big names reporting. And I told you this from the get-go. I said earnings season is coming up. Try not to short the market. Everybody's trying to guess which way the market's going into earnings season. It's not the same as last year. If every year was the same, I feel like the market would be easy. But we get a different look every single year, in my opinion. Okay? Different look as in like sentiment. The technicals all stay the same. Okay? So overall, my sentiment is to stay patient. Okay? And wait for the levels. That's it. So here we are, several minutes later. Matter of fact, we found it about right here, inside and down, 5, 10, 15, 20, 25, 30, 35, 40. So I'm almost right. I said 90 minutes. We'll stay in this range right here. Okay? All right, folks. So let's go ahead and see what else is going on. So, I mean, everything's going good. It looks like you guys are doing good too. Let me, do you guys have any questions about that analysis before we move on? Let me get over here. About right there. Right there. All right, so moving on. Notice we're in this range now. I want you to pay attention to the TTM squeeze. We got a red bar. Remember, sure, the PMZ looks like it's holding so far, but one red bar, I'm not sold that, that we have to do anything here right now. Okay? So far, good morning. Things are looking great. Again, folks, I see there's a ton of people in here listening. Please get over here. Give these things some likes, right? We're over here providing some great trades for you guys. Let's see that you guys appreciate this transparency that we provide for you here. Again, the only service that I'm aware of where we actually have our indicator or our trades straight linked to our Discord, right? Nobody else is doing this. Nobody else is as transparent as us. So just give us a like over here. We appreciate it. Let's go ahead and stop right there. And again, if you want to go to the YouTube page and watch this over because you've been busy,